Hi all, so today I have brought a new video, something different from the finance related or income tax related. So this is related to a marketing technique. So we will talk about 9 neuromarketing principles that makes all the buyers mostly say yes for a product. So neuromarketing principles are those principles which are carved out taking into consideration about the customer's mindset, their thought process and has a proven track record and the history. So let's talk about them one by one. So first is the framing effect. So framing effect means how do you phrase a benefit which is dramatically changing how people perceive it. So if you look at these two pictures, one picture says 1% fat fries and second picture says 99% fat free fries. So generally companies will use this option because it attracts more into the customer's mind that it is 99% fat free. If you put 1% fat, then they will not take it. Mostly because they will think that it has 1% fat. But here they will think it's 99% fat free. So this is called the framing effect. Second one is the affordability illusion. So it says illusion, which means illusion is created into the customer's mind that they are getting more benefit, but it is not the case. It is all the same. Breaking down a large number into a smaller amounts make it seem more reasonable. So let's say a gym membership which is given here. So if you say a customer membership is 350 per year, so it will be a big amount paying to a for a customer at once. But if you say membership is less than $1 per day, it will automatically runs into their brain that it is cheaper. Though there is no difference between these two framings, but there is an illusion which is created into customers' mind that it is cheaper. So this is called the affordability illusion. Third one is the rule of three, which is very evident in nowadays of. So we have seen a lot of products being launched. So people almost never go for the cheapest option when there are choices of three. So if you see any mobile getting launched or any other product getting launched, so if you give customers two options, it will be a fail for a business because two options are limiting choice for the customers and they are not able to decide either to buy this one or the bigger one. On the other hand, if you give them three options, it gives them better choice to differentiate, better choice to pick the product. And mostly, no one will go for the smaller ones, thinking that this will have some better features, this will have some better usability. So mostly people go for product 2 or 3. So if you put two products only 3 and 6, people will not go for 6 and neither for 3. But if you put 3, 6 and if you see the difference between the top model and the middle ones, there is a difference of only $1. So people will mostly choose between 2 and 3. So this will be a big win for the business. So that is why every company has always an option of three models or three options for most of the products they have. Fourth one is the IKEA effect. So IKEA effect is a neuro marketing principle which is based on the thinking of the customers and which is a scientifically proven effect. When people value something where they put more effort, then they buy that more. So if you see these two are Nike shoes which is in picture here. So one says buy this pre-made shoes and one says customize your own. So once you customize something of your own, then you think of that as a more valuable to you. So this is a very good marketing technique. Why this is called as IKEA effect is that because IKEA mostly sells more of the product which you have to assemble yourself. Next one is the power of free. We all love free products when we buy something, buy one get two. So the power of free, what it says is people overvalue things that are free. So once you buy something and you get something for free, that free product will be more valuable to you than what you have bought actually, what you have paid for actually. So even if you don't need them, you love getting them. So there are two pictures which identifies here. So once if you say $5 off on your first order, So you will think or customer will think that only $5 is off. But if it says get free gift with your first order, then someone might think it could be anything. So it creates a euphoria in their mind. So this technique works better than the first one. So free thing everyone loves. Sixth one is the contrast effect. So contrast effect means people perceive something as better value when placed next to more expensive alternative. So if you place a watch, $1,000 watch on its own at a counter, nobody will mostly look at that. But if you place the same watch near to a $8,000 watch, then people will think this is a good watch because it is placed near to $8,000 watch. So if they are not able to afford this watch, which is $8,000, they will buy $1,000 watch. So this watch becomes more valuable when it is placed to a more costlier watch. So this is called the contrast effect. Seventh one is the paradox of choice. Paradox of choice means if you give a lot of choice to a customer, it will overwhelm them and they will be perplexed or not able to make a decision. So that is why most of the companies give only two or three options. So here we have a picture of some membership. So if some picture says choose from 15 different options, customer will be confused what to choose from. That is why companies give two to three options for the membership. Pick from our top selling plans or products. So this is better option. Third one is the anchoring bias. This is again I would say one illusion kind of thing. So it's again an illusion because first price you saw will always influence perceived value. So you go to a showroom or a shop, you see one jacket hanging which says sale price 99. So if you do not know the actual price of this product which is selling at $99, so you won't be very much enthusiastic to buy this. On the other hand, if this is written 200 which is cross now 50% off 99, so it creates one neurological thinking in the customer's mind saying that this was 200 earlier, now we are getting at 50% off. They will automatically try to buy it, and most of them it will be sold. So originally 200, now 99, save 50%. So this is called the anchoring bias. How you anchor the product in the front of the customer, that matters a lot. So ninth one is the endowment effect. Endowment effect means what you own, you feel more important about that product. So people value things more once they own them. So that is why if you see, we have taken example of Amazon Prime. So Amazon Prime, if Amazon says get $9.99 per month subscription, you may not buy or customer may not buy. On the other hand, it says start your free trial for 1 month, 30 days free trial at no cost today. You can cancel it at any time. If you like it, you can continue. So they will ask your credit card number or your details beforehand when you start a free trial. So most of the time people will not cancel them because either they will start liking it or they will think that let it be, it's not very costly, or some of them may forget. So this thing works very well for the subscription based companies like Netflix, Prime, or any other. So these are nine neuromarketing techniques which affects the customers a lot. If you are into marketing, it might be useful, or if you are doing a business, you can take this into consideration and increase your business. Thank you for listening.